In my most recent FNB property report, I introduced some very interesting information from our property broker survey for the first quarter of this year. And that was with regards to vacancy rates. Now, in all three commercial property sectors, we saw a strong perception of declining vacancy rates over the past 6 months prior to the survey by the brokers as a group. The strongest perception was in the area of retail, where the retail vacancy trend index measured minus 72.8, which in a nutshell means that 72.8 percentage points worth of more of brokers perceived a decline in vacancy rates over the prior 6 months than those pointing to an increase. So the bias is strongly in favor of declining retail vacancy rates and increasing demand for retail space by certain retailers. Now, when surveyed as to their expectations of future activity in the retail rental market, the brokers' perception is that there will be an increase in retail rental activity. In other words, possibly further decline in vacancy rates. And one of their key reasons points towards new businesses moving into, smaller businesses moving into retail space and setting up shop. 27.3% of brokers said that they perceived growth in the small retail business segment. 18.8% pointed towards entrepreneurs starting new ventures. So there's a very strong perception of new businesses starting up or entering into the retail space and occupying an increasing portion of retail space. Now, this is interesting because it comes at a time when the fundamentals linked to retail, and I point to the consumer, aren't particularly wonderful. Last week we did have mildly good news that Moody's had changed South Africa's economic outlook, not changed the credit ratings, but changed the outlook from negative to stable. That's some mildly positive news, but no one was getting too excited about that. A lot of it had to do with windfall mining revenues due to a sharp increase in commodity prices not so long ago. As fast as those come, they can go. The fundamentals still remain weak. And if we look at a lot of retail and consumer related data, it hasn't looked good for a while. The existing tenants, when TPN last published commercial tenant data in the third quarter of last year, only 64% of retail tenants were in good standing with their landlords, which is a very low number. They hadn't recovered fully after lockdown. If one looks at consumer confidence, the FNB-BER Consumer Confidence Index still in the negative territory, minus 13 in the first quarter, and worse than in the fourth quarter of last year. It had deteriorated slightly. So consumer confidence is weak, and why wouldn't it be? Yes, in the fourth quarter of last year, we had a reasonably good real disposable income growth rate year on year of 3.8%, coming off a very low base from the prior year's fourth quarter. But we know that inflation has risen and become troublesome. We know that petrol prices have risen quite astronomically. And we also know that interest rates have been rising gradually. We've had the third interest rate hike not so long ago. So the question is, what drives a whole lot of new entrants, or this is what's perceived by the property brokers, into the retail sector and property market at this stage? That's the question. And I'm just wondering whether it doesn't have something to do with the Great Resignation. Now, for those of you that haven't heard about the Great Resignation, it's a phenomenon that's been noticed in the US. It's been noticed more there, maybe just because of data. There is near full employment there as well, so people can resign. But there's been a surge in resignations post the hard lockdowns through the course of last year and early this year. And the perception amongst some is that it's got to do with people being perhaps tired of working for a boss, tired of corporate life. There are theories going around that during crises such as a pandemic, or it could be the global financial crisis or the Great Depression, that people re-look at their lives, re-look at the way they live, re-look at what they do, perhaps get a bit of midlife crisis in some cases, and off they go and decide they're going to go and do something different, often their own thing, as we talk about in corporate life. And so there's a perception that this has given rise, the great resignation is not just people stopping work and going to stay at home, but there's been a bit of a surge in entrepreneurship as well, startup of new businesses. And I'm wondering if that's not to a certain degree the case in South Africa, where after the lockdown, the work from home period, that many of us have felt perhaps dissatisfied with the way we live, what we're doing, are we achieving, are we going places, maybe we're a bit stuck, and that possibly there's some sort of surge in entrepreneurship at the moment. That's what it's not only in the retail segment that the brokers point to increased new business entrants, but in industrial and office as well, which is interesting. So it's quite common across the survey. Now, we don't have as good economic data and as detailed economic data as the United States, so we can't see hardcore data just yet to show a great resignation, a great entrepreneurial surge, but that's what this survey of ours is hinting at, and it's possible. The question obviously is this a good time? Because retail sector fundamentals just aren't particularly healthy. Sure, they're better. We passed the hard lockdowns. Well, there is a new COVID surge that's built up in China. Difficult to see the world escaping that entirely. Do we have another wave of COVID? Do we have a dampening of retail activity and consumer interactions because of that? Difficult to say at this stage. But there are certainly risks. The economy certainly is in mediocre territory, and with higher inflation, petrol price inflation specifically, and rising interest rates, it's a tough time to be a new retail entrance. Hopefully this can last. Hopefully it's sustainable. Hopefully we're on our way to lower retail vacancy rates, higher retail entrepreneurship on a more sustained basis. It certainly is a tough time, though, to be making these sort of moves. I suppose on the good side of it is if you can get through these tougher economic times and start your business up during these and survive, you'll be a tough business. But yeah, this is an interesting phenomenon I've seen in the data this week and this past week. Don't quite know what to make out of it. We'll have to see just how consumer confidence moves in the second quarter of this year, how disposable incomes, how employment trends move, all those fundamentals linked to the consumer and therefore to the retail and retail property sector. At the moment, they're not looking wonderful.